Hi everyone, on this week's episode of the Investors Corner, we're joined by Neil Fenning. Myself and Andy chat with Neil about a whole range of different topics. So if you listen to this episode, we're going to talk about investing in stocks and shares, buying whiskey barrels. We're obviously going to cover the property market as well. Neil's tips and advice for landlords out there after 15 years of working in the property market. And myself and Andy are also going to pull Neil apart a little bit on some of his quirky investment ideas that he's had since lockdown. Enjoy the episode, and thanks Neil for joining us. Neil, welcome to the Investors Corner podcast.
I am in.
How are you?
I'm good, mate. How are you?
I'm very good. Yeah, very good. Looking forward to chatting about a few curveball things on this podcast.
Could be interesting, couldn't it?
Yeah. We used to end with this, but I'm going to start with it on this podcast. So I want to know, what do you think is going to happen to the property market over the next 12 months?
It's that bold question that we always say, if you're watching this in 6 months' time, did we get it right? Did we get it wrong? We'll maybe use this as content.
We will record it and play it back to you.
You were wrong. I was right with the previous one. So I think it's nice and stable at the moment. It's a good market for people moving within the market. We've noticed that in the last 6 months, because the market, when it was hectic, you couldn't sell your property and link another property, and you wouldn't get a look in with viewings. And people that I speak to now, they said that really put them off in the market of last year, and now they're all starting to move again. So I think there's going to be a lot of activity with properties coming to the market.
It was almost impossible to move with a chain, wasn't it? It's a good point, actually.
Couldn't do it. So I've got a few that are going through at the moment that we've actually linked chains. We've helped them find properties, which again, the market of last year was just too fast paced. Everyone wanted it done and dusted there and then. So I think, simple answer to your question, I think it will get busier, which is good. Mm-hmm. January was really busy. I don't know if you guys experienced the same, but January was really busy, and it's nice again now. Obviously, we're coming into half term, so it's a little bit quieter. But January was crazy hectic with valuations, so I think there's a lot more confidence in the market. Which again kind of shows the people that want to move and needed to move wanted to move and couldn't do it last year. They're back on the scene. What was the stat that we were looking at the other week? 44% of properties come back on within 12 months.
Yeah, nearly 50% of properties that were withdrawn will be back on the market within 12 months.
Which is great. And I think a mixture of that in its own right, and then a mixture of the people that couldn't move or couldn't get viewings and then got disheartened, I think that's going to pick up. I think there'll be a lot more stock coming to the market this year.
What type of profile of buyers are out there at the moment that you're sort of dealing with? Is it people looking to upsize, families, first-time buyers?
Yeah, the first-time buyer market still isn't as active as it was years ago.
Yeah.
But they are there. Funnily enough, I went out and listed a 2-bed house last night, and that was the topic of conversation, is, are there any investors and stuff like that? And yeah, first-time buyers and investors are out there. It's just got to be competitive like anything. The main body of the market, I think, are people moving within the market at the minute, which is great. It's the bread and butter of the market, the 3 and the 4 beds that are churning quite nicely. Obviously, where we're based, Shinfield, Lower Early, they're families that are moving, I say constantly, every sort of 6 years as they have another kid or need the schooling and stuff like that. So I would say...
Is there a lot of young families? You mentioned kids and stuff like that.
Yeah, definitely. A lot of properties that we're putting together in terms of deals are people that have been in a 2-bed and they see a nice 3-bed or 4-bed come up, and they've just had their first or second kid, and they want that extra.
Because there was this phrase, wasn't there, around lockdown babies? You know, there's lockdown babies.
People were busy.
People weren't busy with things to do, so found things to do because they needed to burn some calories, and as a result, these children have come out. But it's interesting because if we look at it now, 3 years on from lockdown, we're now those 3-year-old children, 2-year-old children. A lot of parents over the next 2 and 3 years will be really considering moves based on primary schools. And I just wondered whether you've started to see that influx start yet, or whether it will be more throughout the next 12, 18 months.
I think Dan and I both, neither of us having children, we obviously don't notice certain things. I didn't even notice half term until someone mentioned it. But yeah, we've definitely noticed more family activity more people wanting to make that jump up. And I think the combination of the interest rates being better at that time and people pushing themselves at that time, it's going to be a tricky one where you've got people that had pushed themselves to a value that they couldn't necessarily afford when that mortgage term comes up.
Yeah.
So I think there's going to be there's going to be a real contrast of the market. There's going to be the people that push themselves and now they're feeling the pinch, and they've had another kid, so they're feeling the pinch financially on that.
Yeah.
And you've got the people that were comfortable renting, had their child, COVID baby. Do we call it a COVID baby? Is that the right thing?
Lockdown baby?
Mm-hmm. Lockdown baby.
Lockdown
Can't call
baby.
it COVID baby. That
Sounds a bit better than lockdown baby, doesn't it? The COVID baby.
The lockdown babies. But you've got the people that have had lockdown babies and were renting. We've still got so many people that are renting, and they're late 30s, early 40s, and they've banked a load of money, and they're ready to buy. That's our general marketplace in terms of buyers, I would say, is people at the late 30s age.
So in summary, you think there's going to be more transactions, more people moving in chains, more upsizers, obviously younger families looking to upsize and move as well.
Yeah, double deals, which we love.
And what about sort of pricing? And I know this is very much location based, but what do you think on pricing? What's your gut feeling that prices have done over the last 6 months?
Again, I've had this as the hot topic at the moment with interest rates changing. There is a real seesaw effect, though, over that duration of 6 months to a year where people notice the rates changing, obviously, unless it's very drastic. But as the rates went up, obviously the prices came down a little bit again. But they didn't come down drastically. I don't think they shot up like they did as we were coming out of lockdown, in lockdown.
It didn't go down as quickly as they went up. Yeah, agreed.
which is great. But then the rates have changed so drastically that, again, people are feeling the pinch on it. But yeah, everyone goes, well, how do we follow it? What's the right time? Do we wait for the rates to go back down? Well, yeah, you can, but guess what? Rates go down, prices go up.
I think that's it, isn't it? It's just people just need to make their decisions now on what they want to do, because if they're thinking that interest rates are going to come down or waiting for a specific interest rate before they move, there's just no point doing it. Just get on with your plans and just get it done.
Absolutely. Unless you've got a 90% deposit or you're buying cash, you are going to have to take into consideration you are paying a mortgage for circa 25 years. So that fluctuation in an interest rate is always going to be there. You're not going to have the same rate for 25 years. It'd be crazy. But ultimately, that's always going to fluctuate. What's going to fluctuate a hell of a lot more? The pricing of the properties. So as I said, the prices shot up quite drastically, tailed off and dropped a little bit, but the rates have actually fluctuated so much. So when you break it down over 25 years, there's no point trying to judge it. There's no point trying to go, well, actually, I've saved myself a percentage for 3 years. Yeah, well done. You've gone into a tough market and you're paying 25, 30 grand over asking price. So it's one of those things where there's no right time or wrong time. You move under your circumstances and you do it by your means. I even say the same to buyers. Obviously, we'll go out, we'll do an open house and we'll have so much activity. And with a lot of our sales, we'll let buyers make their decision on their offer and we'll put them forward to the seller. But I always say to buyers, make sure you're financially comfortable. If the rates change in 3 years, 5 years, make sure you're comfortable. I think there's a lot that haven't done that.
I wonder what the statistics are around the cost, not the cost of the mortgage, but the cost of the arrangement fee, the stamp duty tax, the agency fees, the solicitors for a classic family in the UK for the amount of times they move.
What, in terms of how much it costs them to move?
Yeah, each time. I'd just be interested to know what the average cost looks like, in the UK, because
it's got to be 15, 20 grand if you're taking stamp into consideration on an average house.
And the reason why I asked the question is when someone makes a decision on the next step, pushing the boundaries on the budget a little bit, but they know that property, they've gone within themselves to keep the monthly costing down.
Yeah.
But they know that probably they're going to move again in 5 or 6 years, whether they actually, if they knew the price of moving and they could work that out, whether actually it makes sense to actually bite the bullet and go a level up so they don't have to move again in 5 years because they're going to be there in their forever home or for the next 10, 15 years. when you actually work those calculations out, what works out as the better move, basically. No, interesting. It'd be interesting to see how the property market unfolds. This is obviously about investing, and yes, the foundation of it is around property, as we're discussing. But I'm interested to know, because you're a creative guy, you've kind of been flamboyant in some of the conversations I've had with you about things that you've tried to that you tried to invest in. So I'm just wondering, from your point of view, as someone that's got a successful property business in property, how your experience has been on any investments you've made outside of property, or any plans that you are likely to make in property or out over the sort of next 3-5 years, really.
I've always been obviously massively interested in property, hence me doing this for 15 odd years. From a personal aspect, I've also been interested in HMOs and service departments and service accommodation. I know a few people personally that have done it, and it seems like a good return. Bumped into someone on a dog walk at the weekend, was having a good chat about it. It's always the way in that, just randomly dog walk.
HMOs?
Just walking along and selling himself. But it's always been something that appeals to me in terms of cost to do it, and then return on obviously what you're getting back from it. Personally, I'm crap at investing and saving money. I like to spend my money, if I'm honest. So
different type of investing.
Yeah, I'm probably the worst one on that front. But yeah, definitely for me, in a property relation, HMOs have always appealed to me as an interesting little unicorn of the market. They're just a weird little marketplace that if you get it right, you get it right. And that probably comes down to me being a sales negotiator and showing people around that we're multi-landlords and pulling up in their Lamborghinis and whatnot going, yeah, all right. And I'm like, how do you have that money? I want to know. And that's always in my mind. But then, yeah, as I said, more recently, service apartments, I've got friends that do it. Buy-to-lets, obviously we've got a few different people that we know professionally in the industry that flip properties, and I get sucked into the algorithms on Instagram and TikTok these days of people flipping properties.
Sharing the story on social. Yeah.
Exactly. But for us, it's obviously Dan and I, our focus and what we've done for the last coming up to 4 years. Jeez, that's crazy.
Yeah.
Coming up to 4 years is the buying and selling and the estate agency side of it. But for us on a personal side, yes, well, as you might know, we set up our own investment business years ago, but it didn't come into fruition because of different reasons. But yeah, that will definitely be on the cards. Dan and Neil, HMOs.
There we go. HMO. What about the three of us? If we had money to invest and we couldn't invest in property, what would be the B investment?
Not NFTs.
Well, I mean, so you say, you say about NFTs, but yeah, if you catch them early, the up and coming ones, you're in.
Because I was sucked into those, wasn't I?
Yeah,
a couple of years
just
ago.
after lockdown.
I read an article the other day, and there's a altcoin called Shibu. Don't know whether you've heard of it. Shibu Inu it's called. And if you'd spent $100 7 months ago and getting 1.3 million pounds or something like that, it's now worth 87 million pounds.
Wow! Why didn't we do that?
7 months.
It's crazy.
But is it?
Well,
I don't quite
if
get
you
it.
sold it now,
and
you managed to sell all of it, then it would be worth that. But it's just, can you get rid of that amount in one?
Is there a buyer for it?
Yeah.
Because it's hard, isn't it? It's like someone might turn around and value the Mona Lisa and say it's worth that, but
can you shift it?
Because is it able to be sold at that price?
Is the value being relevant to the person at the same time?
Yeah.
But you've got people out there with some ridiculous money that are happy to spend money on anything and everything.
Yeah, of course. Yeah.
But no, I think one thing that I've been interested in recently is AI, automated YouTube channels, stuff like that. I think there's a kill in there to be had. It's just setting it up and letting it do its thing. You'll find this funny. Nearly invested into whiskey casks as well.
We've joked about that on this because we're all in that algorithm. You get the whiskey thing, and you're like, "Oh, that looks interesting."
I've had some interesting chats with the guys. They obviously like to call on a regular basis and catch up with me. And
the thing with whiskey, though, investing in whiskey, you've got to have it for a long time, haven't you? Because they give you a barrel, right?
Try not to
You
drink
can
it.
invest in a barrel of whiskey, and then you've got to keep it for, don't know what, 10 years or something like that.
I don't think
to
you
get your
own
return.
the whiskey barrel. It's not like they send you a whiskey barrel to your house.
They keep
basically
it in the
store it.
Yeah,
But you store it over a duration, and you can either buy 1 or 4, or obviously in multiples of 4. You can tell I've looked into it. But the cost of it is actually ridiculous. But obviously, it's like anything; it's an investment. The return on the investment looks pretty good, but it's probably going to be one of those things that in a few years you'll hear a radio advert going, "Did you get conned into?"
Yeah. Where is that whiskey barrel gone that I invested in?
And I'm just there drunk in the corner.
Yeah.
It's difficult, isn't it? I've spent the last probably 18 months, maybe 18 months playing around with just stocks and shares, Hargreaves Lansdown, just messing around with it basically, just to try and teach myself. Nothing crazy, couple £100 a month, just to see kind of what X, Y, and Z looks like, and get a real kind of understanding of how that market and that investing process works. And I'm doing it the expensive way purposely. Like each time I do a transaction, obviously it's a low value transaction, couple £100, but I'm getting hit with a £12 fee or whatever. But I'm doing that purposely to learn. But it has been quite interesting when I built my wish list or my watch list to then see how much certain things have changed.
Yeah, fluctuations.
Unbelievable. I mean, like Meta, for example, just an absolute game changer. Like the amount of traction, if you'd have put 10 grand into it 9 months ago, it'd be worth 20 grand.
Yeah.
Like there's a big...
It's still just going.
Yeah, in that window, it may be 12 months or whatever the metric is, but, quite a significant jump. Whereas putting something into Tesla, it would have potentially dropped. Maybe lost 9%.
I think Tesla, there'll be money to be made there because of him building the robots. He wants a robot in every house within the next 10 years or something.
But will there be Tesla bots? Or
that's what I mean.
Because obviously he's got multiple, Starlink and all sorts of...
Tesla are building the bots.
Tesla are the bots, yeah.
And he wants it basically so that they are household bots.
Yeah, he's already built one, hasn't he?
Yeah.
They did a little promo thing on it, and I saw it online.
But even the things with the cars, like when the first Tesla came out, that picture of Japanese person was sat asleep at the driving seat while the Tesla was driving him to work.
Yeah.
And the whole world freaked out about the fact that these auto cars could drive, and obviously that got pulled. And it was like, no. You can't sleep at the wheel. We did not like that. But and then things like Deliveroo has spiked. Like, not as much as Facebook, but a fair gain in Deliveroo. So you kind of look at, from an investing point of view, where should you be investing? I mean, Deliveroo's obviously expanded massively since lockdown.
When you look at, again, Uber Eats, is it Uber Eats or someone that's now got train lines? You can get a train on an Uber or something.
Oh, really?
Oh, really?
Yeah, so all Uber related, I would have thought. Yeah,
Uber are just going, we'll take the market.
Yeah.
Has investing got to excite you?
Yeah.
Do you think?
I think the reward has to excite you. I think that's the way I look at it, is I've got a few different pots of things. I've got a Monzo account that's a nice 4.7% interest rate. And, there's a chunk of cash in there that it's quite exciting to go onto the little thing and say, right, what's the lifetime revenue that you've made or the lifetime interest you've earned on it? And it's kind of like, oh, that's quite cool. I like that.
The Hargreaves Lansdown is more of a game, I would say.
Yeah, it is.
At the same time, you're playing it. And I know Dan's started to look into it. I've been stuck in algorithms of investments and, again, AI investment. Can you tell I'm just being lazy with it? I want to set it out. Everything's AI.
Just setting up a system. And
someone do it for me.
Just do it in the background. But I'm chatting to a guy at the moment he talks about automated YouTube channels and stuff, but it is, you just set it up and hope for the best. But yeah, I think it's with investments, it is more of a game.
Yeah,
it's the excitement, and you're not a gambling man, so to speak. Personally, are you?
I went to Vegas for my boy.
Other than that, but it's not like you're making massive risks that will be life changing for a negative. You're just having a bit of fun, which I think you've got.
The only reason why I asked that is because you've obviously got property, right, which is one of the safest investments that you can make, and some people are, especially that I've spoken to, are coming away from investing in property because they've lost the excitement from it compared to the excitement that you can get through the stocks and shares, the crypto, even watch investing. Getting on the waiting list for a watch, getting it at cost price, and getting that watch secondhand right now, you're paying $5,000 more.
Yeah.
So people are more excited about that. Obviously, there's a bigger risk that comes with that.
I think that's the tradey deal, market tradey sort of vibe, isn't it?
You mentally, you like that kind of that
just keeps your mind going. Do you know what I mean? Rather than putting it in property. Yeah. Although there still is a place for putting money into property, but just a different mindset of, I wonder what my stocks and shares are doing today. Shall I cash them out? Shall I do this?
Spotting those opportunities, obviously the news recently has all been around Range Rovers. Obviously, what's happened with the Range Rovers, with how people can now steal them so easily, and as a result, it cost you $5,000 a year minimum to get a Range Rover insured. 30 grand Range Rover 3 months ago is worth 20 grand now. They've lost a third of their value overnight. Bang, and you look at that and you go, oh, thank God I don't drive a Range Rover. Used to, don't anymore. Thank God I don't. And then you look at it and you go, oh, that has to be fixed.
Which they've already said that they're going to do the updates and the upgrades and all of that sort of stuff, aren't they?
So do you go and get a load of Range Rovers? Do you go and buy 4 Range Rovers?
Buy low, sell high.
In that middle market and go, right, they're 20 grand. But
you got 4 months ago. Driveway.
Yeah.
Let's get some.
You've got a double garage.
Let's go.
You wouldn't get a go-kart in the garage, but it is a double garage. But you look at something like that and you think, is that a place to go? Because if they fix it and the value of the Range Rover goes back up because the market dispersed and then it comes back in, do you make X, Y? But that's the tradey deal part of it.
You could look at your stocks and shares of it. And I was going down the route of buying a load of Range Rovers, but you could look at your stocks and shares and go, right, it's obviously taken a dip, but given the conversation that we were having outside about marketing, do you think it could be Range Rover that are into this? And,
you don't know, do you? Yeah.
Okay.
Never know.
It's all publicity, isn't it?
I mean, they probably haven't had the best of purchasing types. It would have been a pretty awful market plan if they had.
It's a costly advertisement plan, that's for sure.
Yeah, so I'd just look at my Hargreave Lansdowne thing just to give you a context. So my total gain in percentage for the fund that I've been investing in now for the last 18 months has gone up 28%.
So you're starting to learn.
So 28% is all right. For 18 months, that's a solid return, right? And it's quite interesting to kind of just learn about the things. But then, so I look at Meta. Meta's gone up 85% year on year. Wow. So this is in the last 12 months, 85% year on year. Deliveroo's gone up 8%. Amazon, 12%. General Electric, 34%. That was a tip. Uber, 3%. Apple is down nearly 1%. And Lloyds Bank is my worst performing one. That's down 21%. Don't invest in banks.
What made you invest in Lloyds Bank?
Because the reason I threw, and it was only minimal numbers, there's only about 300 quid on that. There was something that was going on in the market at the time that Lloyds Bank they were potentially looking at doing some big acquisitions within the bank world. Right. And I thought that makes sense. Didn't happen. Should have gone for Virgin. But but that's part of it. Like General Electric, General Electric were very much involved in one of the government grant things, and I just thought, I like that story. Makes sense. They're involved in that one of these government grants, so it's going to have a push. It's gone up 35%.
So this is the thing. It's like, because I follow a lot of traders that it's their daily job to watch the market and watch all these things. It's a full-time job. So for someone like yourself or myself doing it as a bit of fun, that's like we said, that's what it will be. It will be a bit of fun. But you're like me, you like learning into it or looking into it and going, right, how can I do this? How can I get good at this?
It's the risk and reward though that you mentioned, because I got the best part of 60 grand in a Monzo. It's a fair chunk of cash. And I only did that 3 months ago, I want to say, about 3 months ago. So I've made about £1,000 in interest. And that excites me. I'm like, that's because it's free money.
Yeah.
It's my money making money and it doesn't lose money.
Yeah.
Because it's there. So I see that as a win. Whereas I've got a couple of grand in Meta and that's nearly doubled in 12 months. But not in a million years would I think of moving that 60 grand into Metastock, because the risk of losing it, it's still my money, but I could lose.
But you could win.
It's what the level you could.
There you go.
But I wouldn't take that risk with that amount of cash. But I would put 60 grand in a heartbeat into a property if it was the right deal.
Yeah.
So Dan and I, funnily enough, we've sat down and done our pensions and some financial planning as well with some associates, should I call them? And again, a lot of it is long term. And I was sat there, no disrespect to the guys if you're watching, but I was sat there going, this is boring.
Yeah.
I'm sat there going, oh great, I get to enjoy that. And again, it's like retirement. Me and Dan see retirement very differently. Like, he likes to plan for that. And dare I say it on camera, I've always said I will be disgustingly rich by the time I get to it. Don't know how. I haven't worked that one out yet, but I will.
But it's your goal.
Yeah, it's my goal. And I've always said it. So by the time I get to retirement, I'm not too fussed, but it's the sensible thing to do it. And then we were coming up with some sensible ways of where to put our money, so that it's not costing you money, it's making you money.
Yeah.
But then again, you look at them over a long term, and you're like, I'd rather go put it all on black, see what happens.
Yeah, it's so exciting. A lot of people seem to make money in the e-commerce, like the Amazon seller world.
Yeah, that was a big thing for 3 years ago, it blew up.
A generation below us, they're big on it, aren't they?
Yeah.
It's a generation below us. Yeah, there's a load of nonsense videos out there and podcasts and things, but in a lot of the cases, people are making some decent money sat at home, just clicking some buttons on their mouse. Really,
it's the age of the nomads that want to travel around. I remember when I was traveling when I was 19, 20 or whatever I was, and there was a young lad that I bumped into in a cafe, and he was working, and I was just catching up on some bits. And he just traveled around for the last few years, and he wasn't in e-commerce, he was in logistics and moving freights and stuff like that. That was his business. So anything that you can do that's hands off, so to speak, and you're not necessarily grounded to a position, I think that's just the way of the ages that are coming up behind us.
Yeah. Well, it just shows there's different ways to invest your time as well as your money, potentially as well. I still think one thing that we haven't covered, and one thing that we will definitely get on this podcast that I am super passionate about at the moment, is businesses. Yeah. Investing and buying in businesses.
It's another one I've been looking into, yeah.
Because I think that comes back to the risk and reward. If you put the work in, you put the hard work in, you can get reward from it. If you're clever with how you market your company, set your company up, there is a lot of poorly run businesses out there that should be very profitable. And a lot of people get misunderstood by the number one point of a business is to make profit. Yeah. And if you've got a purpose, brilliant.
Purpose and a passion for it.
But if your purpose is not making you any profit, then your purpose is not going to be brought to life, is it? Yeah. So, but I think that's something that would be interesting as well to talk about, as someone that's really done a lot of acquisitions in businesses, because you do see a lot of those people that you spoke about, the stereotypical landlord that owns a big property investment, normally own quite a big business investment as well, portfolio. So that's definitely something that I'm learning a lot more about at the moment, is that acquisition and business investment. Obviously, we've started a lot of companies, through the avocado train, which is exciting, but that's a place as well. So I'm just interested, we'll bring it back onto property, but if you were giving a landlord that's looking to buy a new property in 2024, what would be the single piece of advice that you would give a landlord?
I've basically given similar advice for the last few years, and will continue to do so until I see a trend. But for our marketplace, the majority of 3 and 4 bed properties around early and lower early are obviously going to be families, and early and lower early is great for the schools, primary and secondary. So you'll get families that want to stay there for a long time, and they'll rent for a long time, which is great. RG2, RG7, so Spencer's Wood, 3 Mile Cross and Shinfield predominantly are more of a business district, in the sense that people are wanting Green Park Business Centre and access into Reading, which again is great, but you're going to have people on a contract and not flipping properties, but moving in and out of properties a bit more often, relocating and whatever else. So I've always said to people, like we were touching on, eggs in basket, have the larger 2s or the 3s, where you're going to have those families that are always needing properties. Similar to what I said earlier about 3 and 4 beds being our bread and butter of the market, I would say 2 and 3 beds are the bread and butter of the rental market, in my opinion.
That 90-second bit of information there from Neil, about how hyper-local he's gone, and knowing about, where families are, knowing about the more industrial commercial element of things. For investors, when you talk about location, it's vital that you get that level of info. It's why they say invest closer to home, because you know it better, right? But it does make me also think people underestimate the value of talking to an agent that knows his trade in his place, that hasn't got an agenda. I know that's hard, and people may laugh about that. If you're driving, you just laughed at that. I'm sorry. That's my industry. Nothing I can do about it. We're trying. But that bit of information there that you've just shared, for someone that's thinking, where should I put my money? You would feel very confident in setting up a 2 or a 3 bed, in that area with that in mind, really.
Well, you've just set it up in 90 seconds that if I'm a landlord and I've got a long-term investment goal to hold on to that property and rent it out long-term, I'm going to go to the area that you're in, because that's where the families are going to be. Less families move because of the schools. Great.
Yeah.
I'm going to invest in that area, and you've just done that in 90 seconds.
And you look at something where you go, right, it's got a good Ofsted rating at primary school level, good Ofsted rating at secondary school level. There is no reason to move when your kids turn 11 years old, and as a result, you go, right, you could have a family in there for a very, very long time, which is great, because less void periods, less maintenance work, less refurbishment, blah, blah, blah. And it all kind of cycles from there.
Well, I see it day in, day out. So, for example, the one in Chinfield that I launched last week, that was a rented property, was rented for the last few years, but they were struggling with the rental because it's a 5-bedroom house in Chinfield. So they've now sold it within 24 hours, just saying. But then I've also got tenants that are in properties, as I said, in low early or early, and you get it all the time. But you've got tenants that are not upset, but a little bit upset that their landlord is then selling. It's like, we've been here for ages and we've got our family here. So definitely on those points.
Yeah, I mean, we work sort of quite closely together, Neil, and in your area, there's a lot of properties that are coming available to let, your family homes, a lot of overseas investors buying those properties and then renting them out. What do you think attracts those overseas investors into buying property in your area? Because there's quite a lot.
I know we've merged clients where they are literally overseas buying a lot of the new builds. So again, RG2, RG7 has a lot of new builds going on, and there's more going on. Quite simply, it's simplicity. It's the simplicity of, right, I know what I'm getting from buying off plan, and I can just quickly rent that straight out. And then
you got Reading, you got London in an hour. You got the Elizabeth line that connects the dots. You're under an hour to either airport. I think when you look at it as a location from an overseas point of view, just looking at the UK map, you got Windsor there. You just look at it and you just go, right, you got tourist attractions, you got London, you got airports, you got schooling, you got a city there. I think
it's a great spot for buying, selling, and renting. We've always been quite fortunate, because whenever I look at stats, I don't often look at stats, but when I do, I look at it across the UK, and then I look at it for our Reading area, Reading in a general. And we've always been fortunate because we're the biggest IT hub out of London. So we're always going to have that influx of people buying and selling, and obviously wanting to move within the area. And then investors will look at it and go, well, that's a hot market on both sides.
And you get good returns as well for those properties. I mean, we had a 4-bed that came up £2,500, 3-bed 2,100. So the returns are good in that area, aren't they? So,
but that's the thing. I sent that to a friend that's looking to move back from towards London, and he was like, "That's so cheap."
Yeah.
But the funny thing is, it was in a group chat where it's my other friend who lives up in Scotland. And he's like, "That's ridiculous."
Yeah, it's crazy, isn't it? The different market.
It is unbelievable. So as someone that's in property, but also dabbling and looking at a variety of algorithms, let's say someone came to you today and said, right, Neil, I'm going to give you 150 grand and I want 250 grand back in 10 years' time, and you can keep the rest of the profit. Where would you put that 150 grand?
Beach bar in the middle of nowhere. Does that count?
That's for different reasons. Back on the purpose, no profit point.
Oh yeah. Sorry, not take the money and run to a beach. I'm looking into, funnily we touched on it, but I'm looking into buying businesses, as in another topic that I'm learning at the moment. I think there's definitely money to be made there as investment, just buying profitable business as you look at it black and white and go, that can make money.
Yeah.
Not, I'm interested in knitting socks.
Yeah.
That business, knitting socks, can do what it wants.
Always need socks.
Everyone needs socks. And then obviously one thing for me is the AI automated YouTube channels and stuff like that. YouTube is just a power in itself.
Yeah.
It's ridiculous.
Yeah, it will never switch off as well because it captures the generation. All our kids, your kids will watch YouTube. I just bought another iPad.
I never saw it as a thing.
She can watch YouTube on it. It's mental.
Crazy.
Really.
I find it mad when people say that their kids just sit and watch YouTube. I'm like, I go on YouTube for business related stuff, but I'm again of that generation. You guys are the same, where you kind of you've used YouTube as it was becoming a thing, and now it is the thing.
Yep.
YouTube for kids is the thing they watch.
Yeah, and it'll evolve, and the generations change.
Have you ever watched some of these programs when they're sat there soaring around their house just playing with toys, and it's got like 60 million views?
Yeah.
You're like,
there's loads that
I ban those. They're not allowed to watch those particular ones you're talking about. It's weird. But if you want to watch Peppa Pig, if you want to watch Dora the Explorer, okay, go watch it. Those
ones are weird. I know a girl that she's got a massive Instagram and YouTube following. She opens toys.
But that's what I mean. It's got to that point now where you can literally do anything.
Yeah.
And you can become famous and make money from it.
What is it, ASMR as well? The old sounds?
Yeah.
That makes me sick.
The kids watched constantly. They sat on and watched the telly with the YouTube on, and it was simply a car running over different things. And just a close-up of the wheel, squashing things, like an orange, Play-Doh, a doll. It's the weirdest thing, but they're just like, wow, that's really interesting.
It makes me worried about the generations to come and the brain science behind it.
It's a perfect way to end the podcast. So, property, YouTube, whiskey barrels, Hargreave Lansdowne, Monza accounts. We've covered it all really on this episode, but I think that's what it's about. It's just chatting through it, and people listening will probably take a bit of value and enjoy the conversation as well, I would have thought. So, Neil, thank you for coming on.
No, I appreciate it. Been great.
Why have we made the Investors Corner podcast, Ian?
I think online at the moment there is just way too much noise, waffle and nonsense. Everyone's got an agenda. So the goal was to make a podcast for people that want to invest money in property or other areas where there's no waffle, there's no nonsense, there's no agenda. It's opinion-led, but it's an honest opinion. And it might not be the right answer, but we're going to share it.
So on the podcast, we're going to supply people with access to mortgage brokers, financial advisors, planning experts, development consultants, everything around the property industry and the wider fields.
Yeah, so if you're looking at investing in the future, you know that just having an income from your employer or from your business is not enough to give you the life that you want down the line. We're going to hopefully give you some of those answers that will give you the solutions you need for the future.
So please hit the subscribe button. The more subscribers we get, better guests that we can get on, and the more people that we can reach. So hit subscribe.